Honestly, you would have thought the world was ending right now.
Market this week felt horrible. In fact, many are considering it the start of a potential market crash.
Now in the grips of an inflation scare that has put a chokehold on the growth stocks.
Okay, the market is getting ugly and getting ugly fast, okay?
Pathetic, isn't it? If the recent sell-off is enough to spook you, then you actually may as well liquidate everything you own and buy bonds, you old person, or do something far, far worse, hold cash. Today, I'm far too impatient to start my portfolio update as I need to talk about the market and what's going on in the news cycle at the moment.
I'm as mad as hell, and I'm not going to take this anymore.
We'll then look at how my Vanguard Portfolio performance has gotten on over the last month, so during February. And then at the end of this video, I'll then wrap up with some new changes that I'm making, which you might be aware of, you might not. Because for the first time in a very, very long time, probably 3 years in fact, I've invested outside of Vanguard. Some of you might know where this is going, as you watched my previous videos I think I posted last week. If you don't, then I'll put a video on the screen somewhere here, so you can have a look at that if you want to. Anyway, let's start with the stock market. What a circus it's been. You would have thought it was Black Tuesday or the dot-com bubble had burst, when in actual fact the S&P has only sold off by about 2.5% in the last week, maybe a little bit more in the last few days. In fairness, if you weren't aware of the actual numbers, you might reasonably be a little bit scared. Literally every article, every YouTube thumbnail, every CNBC segment is coloured in a blazing red, and for added drama, a lot of them have fire in the background for some reason. Ooh. Let's get all this into context. Only 60 days ago, yes, 60, like 2 months ago, the current share price we're seeing in the market were actually all-time highs. If we look back, the market's actually grown 40% since the bottom of the dip last March. So we're only a year ago from then. So it's been an awesome performance since then. Would you feel the same if the stock market had traded sideways for the last 2 months instead of growing and retreating a little? Would we get the same sort of news cycle we're seeing now? I'm going to take a stab in the dark. Probably not. It's like everyone's memory is like a goldfish, and we have a complete inability to be rational. If your gut instinct is to panic right now, then you might need to reevaluate why you're in the stock market and if it's right for you. The right instinct you should have right now is get in, I can buy it at a lower price. Let me go on record to say, and this might sound a little bit harsh, it'd be awesome for people like me if the market do a double backflip and drop 50%. The end of now propaganda would actually help me and most likely help you if you're early on in your investing careers. The only people who are most likely have a decent reason to worry right now are people that are close to retiring. But if they've got everything invested into stocks, then they're kind of opening themselves up to this. The stock market dropped the same amount of this just in October, only 4 months ago. And you know what's happened since then? The market's up 17%. Actually, 20% if you ignore the recent dip. My advice, take a chill pill. If you're anything like me, you should be cheering on the market 3 weeks of the month going, please grow, please grow. But in the week in terms of you buying in, you're hoping that the market will drop so you can buy it at a lower price. Looks like the stock market gods have listened to me this month, as it was growing solidly for three weeks, and then the last month it completely sold off for me to buy last Thursday, so pretty good for me. Anyway, rant over. By the way, I've got a bit of a new setup, so yeah, I quite like it, but let me know if there's anything you like or don't like about it. Anyway, let's get to the good stuff. Where has Mr. Stock Market taken my Vanguard account over the last month? It's obviously not been a great one from what I've just said, but actually let's see what the impact is. If you weren't aware before this episode, then my platform of choice is Vanguard. It's posted everywhere, so if you've made it this far and not worked that out, then God bless you. Anyway, if you are looking for a platform for passive investing, I would highly recommend them. No affiliation to them. Don't make any money out of saying that. It's just the truth, and it's from my experience, they're really, really good. I'd also be amazed if you don't know that what I invest in is VWRL, which is actually a short-on version of the massive mouthful, which is the FTSE All-World UCTIS ETF. It's a really good portfolio that I like, gives me massive global exposure at a very cheap cost. My update came a little bit late last month. I believe the share price of VWRL is around about £80. Every month I've been really amazed that the market has kept on moving higher. It's a bit like, I don't know, every month I've been saying it's probably not going to move higher, and then it's moved through a new glass ceiling every single month. So I'm going to stop saying that, but as soon as I do stop saying it, you know what's going to happen, it's going to retreat massively. I think we hit an all-time high about 81.50 the day after Valentine's Day, so what a treat. Since then, the market has sold off a little, not a lot like the media is saying, with a constant decline over the last 2 weeks, totaling about 4.4%, leaving us at around 77.80. It is quite crazy. as I remember quite well, it being I think it hit this price around December last year, and I was thinking, God, it's going to drop at some time. So it's amazing that it's grown all the way to 81.50 in such a short amount of time. It just shows you that you can't really time the market. So how has this world-ending sell-off affected my account? Well, in my last check-in, we were just shy of 52,000, about 50 quid short, I think. In terms of market gains, we actually finally smashed through the 5-figure mark halfway through this month. But actually, how has it fared since this sell-off that we've seen? Well, this month I'm happy to report that we've sat just above £51,000. You might be sat there going, what the hell? There's been quite the sell-off, but your portfolio still stands at 51k from 52. Well, you need to remember, I've invested £700 this month like I normally do. It normally goes out around the 25th of every month. It might be the 25th, it might be the 24th. So I think this Thursday it went out. I've been doing this since January, and it's part of my dollar cost averaging strategy. So in reality, month on month, I'm down about £1,600 to £1,700. As mentioned, I did briefly break through the 5-figure club in terms of gains, but sadly that was short-lived. My gains now sit at around £8,100. Nothing to worry about. We do need to take into consideration that just under 5 months ago, I was actually sat with a £3,000 loss, which after 3 years of investing would have been pretty stressful, but obviously I think we're all pretty stressed at the time with everything that was going on with the illness, let's call it. If your account is sat in a loss at the moment, then please don't freak out. Don't let it ruin your day. It's just how the stock market rolls. I can't tell you how thankful I am that I didn't cut and run just over a year ago with a £3,000 loss. Yeah, I could have had about 31 grand in my hand and I could have bought, I don't know, a brand new Audi A4 or something. But 12 months later, I've got 20 grand more in there. And that's not too far off having enough money to buy 2 new Audi A4s, for example. This just shows me again how good dollar cost averaging is, and it is your friend and you should harness it. If you're sat on a lot of cash right now, then I do feel hard for you because it must be quite a difficult decision of what to do with your money right now. If you do have the stomach, then all the research says that the best strategy is normally putting all your money in the market as soon as you can. But if I'm honest, I don't even think I'd have the appetite to do that. So actually dripping it into the market through a dollar cost averaging strategy might be the best option for you. Let's have a look at my top 10 holdings. The biggest impact out of them all has definitely been on Tesla, who have really been beaten up recently. If you haven't seen their share price, I think it's down 20%. It used to be my 6th biggest holding, but I think it's now slipped down all the way down to 8th. I don't think Elon Musk is that bothered about it, and I can't say I'm that surprised. There's a lot of soft money which has been flowing into Tesla. Everyone's trying to be chasing it to get on top of the gains. A bit like we've seen with ARK Invest. We always see this with high growth stocks. People jump in because they don't want to miss out and get FOMO, I guess. A bit like we've seen with GameStop, but actually they're the sort of people who aren't in it for the long term, and then they're going to sell at the first signs of it going backwards. As always, my strategy doesn't change. Dollar cost averaging and hold for the long term. I do get a lot of questions about what funds to hold and then the nuances between, Global All Cap, Life Strategy 100 and VWRL. Look, I get it. We all want to pick the very best and we don't want to be missing out on anything. But the honest truth is, you'd make actually much more of an impact if you focus more on being able to invest more and not getting dragged into trying to time the market. So, what changes have I made? Well, I'm going to confirm something straight out of the gate. One massive part of my strategy doesn't change at all. I'm still going to continue to put an allocation of my salary away each month into my Vanguard account, into VWRL. It's not going to change for me. But I am in the fortunate situation where I do get bonuses from time to time. This allows me to top up my Vanguard account, or I can get a little bit creative. I've actually got 2 projects in the pipeline which I'm going to be investing into. The first is I'm actually going to finally get around to investing into my cryptocurrency portfolio or index. I'm trying to juggle it all. I'm actually in the transition of moving money over to a crypto exchange. It's currently in the ether at the moment, which is making me a little bit nervous, but it will get there, I'm sure. So I'll have an update on that in the next few days. The second project is going to be a bit of fun. For the people that have been watching for a while and that know me, they will know that I'm extremely pessimistic about the mystical art of picking stocks. Did I say mystical? I meant to say bullshit. If you want to know more about my view on stock picking, then I actually did about a 10-minute video a few months ago, drawing parallels between a show that Darren Brown did in 2008 about horse racing and the recent events around Cathy Wood and ARK Invest. I'll put a video somewhere here again. So, what is this project? Basically, I want to run an experiment. An experiment where I get my dog to pick stocks. Yep, I said it. I want my dog to pick stocks. I'm then going to pitch my dog stock picks against a YouTuber who picks stocks like a lot of them do at the moment, and against the viewers. Yes, you. I don't know exactly how it's going to work, but I'm definitely going to make it work. I've got some pocket money to one side. I've got my dog who's currently sleeping on the curtain over there. And yeah, I've got time to do it. What could possibly go wrong? Expect something mid this month. Keep an eye out for it. Anyway, that's all for this video. Let's see where April takes my Vanguard account. If you've made it this far, then a massive thank you from me. I also create other content on this channel. One of the videos that I'm most fond of is called 5 Inconvenient Truths About Investing, so why not check it out? Link should be on the screen right now. That's all for this video. See you in the next one.